wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning P, how's your week?
Really good. I think one big thing for me was I just had a lot of stuff that didn't react strongly to the Fed and the rate hike and all that, and just kind of did its own thing. Sort of what I was looking for. Caught some rallies in basic materials and oil that late in the week, and yeah, it just went well. Friday, just two trades for me. Both came off really well. Adobe and MSTR. So just really happy with that. Kind of less is more kind of deal for me.
Yeah, I don't want to say lucky, but I've been focused more on my like I don't want to call it my older style of trading, but what I used to look for, them full dollar moves, finding a stock that will go 7 to 8, 8 to 10, 10 to 11, stuff like that. Um,
Yeah.
been very productive with the less is more, and overreactions kind of are coming back for me. Chegg's probably the best example of that. Stuff just gets completely oversold on nothingness, and just playing the little bit of relief from that. But again, a lot of familiar names for me last week. Fubu, CLSK, ASTR, Chegg, PCT, great find by you. I don't know how many people stayed on that, but stuff like that and Weight Watchers, it might take 3 or 4 days for a $2 move. Um, but it's there. I mean, it's researched. We have a thesis on it. Why? So just kind of staying in those pools have been better for me. Um, but definitely the less is more is kicking in this market for sure.
Well, the Chegg thing to me, had that initial drop on earnings, and it was that follow through the next day that really overdid it. And you saw that right, when it opened, how it kind of came back, got about half that move back. So yeah, I mean, and that's just one that we've been familiar with, and as it keeps checking down, we're able to go back to it. I did that with Upwork on the overreaction, and it actually went further back than I thought it would. It pretty much moved to flat within 20 minutes, after being down, I think like 15% or something like that. So it that one really worked for me. I'm really still kind of adamant that shares through some of these earnings moves, even when I'm optimistic about it, is working better. I did that with Coin and Carvana. Carvana, I thought the run up would be decent, and I got like 4% or something, and I kept half the shares, and then we saw what happened after that. But yeah, I mean, so on stuff like that, they move. I mean, you go 40%. Like, yes, the options are going to move well, but Carvana options were 400% implied volatility. So it even in the money, if that move had been 20%, you're not getting that much out of it. And having the shares gives you control to sell after hours if things go badly. So there's just a lot of reasons um, to like that. And even though the position's larger, I prefer it to just doing a $50 lotto that can go to zero. I just don't like those. Psychologically, it's just not a great feeling to buy something and have it go to $1, and then you can't even get rid of it, and you just got to look at it in your account the rest of the day. It's just not for me. Been there, done that. I think the way we navigate earnings is better, and I think like we've gotten better, and I think the room is doing it as well.
Yeah, especially if I mean if you said it from the share side, I'm thinking it's the same way from the option side. You just got to be a week early, get your position, play the run up. If you want to keep some freeze, keep some freeze. Um, but the moves usually happen before and after, not through. You kind of got to set yourself up if you want to play through an ER. In my opinion, you're not going to buy it in the morning of the ER. And a lot of people get caught up in, oh, what's earnings today? Um, that's not usually the time to buy. People are already there or already scaling out of a trade.
Um,
Um,
yeah, and I'm just looking at the day chart. I mean, I don't want to get too much in individual tickers, but like the day chart on coin and that wick, that bottom wick there, right at my pivot I had at 47.40. And so once that 50.86 broke down, then I'm thinking, okay, I'm gonna take this back to your level, which is a few bucks higher, like 53 and change. I can't remember the exact number, but I mean that share side to me. Once we went under 48, I'm like, okay, this is a good enough trade share side, even just for some relief, even if the pop on earnings is short lived, whatever. And it wasn't. It just kept going, and I kept about half, and then just took it from there. And then all of a sudden, here we are back pivot 56.31, and we go from there. Could break down again, could go higher, whatever. It's just when you get this familiarity with these stocks, it just helps so much to just navigate where it is. And for me, the first stock I ever learned this on was Enphase. The way that weeks ahead of earnings they would do something with it, right? And they would position it where they wanted it, and then it would kind of go from there. This time on Enphase went the other way and went down, but it's the same. It's the same idea. Whales want to build positions too, but they're the ones who can actually move it around to do that, especially on some of the lower volume stuff that we trade and the mid and large caps and all that. So yeah, just kind of staying on that, um, being early. That's kind of what we're all about. And I don't like the questions after a big move, like, is there more here? I think that you want to pay attention to when we're talking about this weeks before you ask that question.
yeah, a lot of the what I get caught up in with people is they ask questions about like how did you know the move was coming or how did you see the move was coming. And we'll just use coin since we're way on. How do you see it in coin? And then they try to apply what we say to another ticker like Tesla, and that's
Yeah,
just it's not like a one size fits all shoe. Coin moves different than Tesla, so your time with coin, you're gonna learn how to trade that chart better. Just like my time with Tesla, I can trade that chart a little better. And passing that along isn't something. It's not like oh, it just hits. It just when RSI is low and it's below the 200. It's not that simple. It's just the mechanics of the chart. You get to know when it's oversold, overbought. You get to know when it's at supply, at demand. You get to know what it should act like around support and resistance. And that's why the lines are important because you're looking for a response around those levels. Um,
yeah,
and again, it's not every ticker is going to be completely different. So mastering a few, I think, especially as a new trader, that's the best thing to do. And I wouldn't go 100% tech or 100% Bitcoin. I would really spread it out. Get yourself a poopy penny, get yourself a blue chip, because you're going to learn on what you can see easier, and that's all you should be trading. You should fit your style around that, in my opinion, because coin's not moving like Nvidia, Tesla, or Snow. They're all a little bit different. And to be honest, I don't figure them all out. I mean, that's why I don't trade Snow. I can't figure it out. I mean, and what I can
yeah,
figure out isn't enough range for me to trade on the share side. So it just
yeah,
doesn't.
exactly. And that's why, I mean, yeah, Snow's a good example where it's really it's kind of compressed right now, and that is when that's when you trade it on the option side. And because my if my level is, I'm going to 142, and it's like, oh well, this is going to go back to 145, and it might go to 148. I mean, that's just not really enough to have a share position. So yeah, completely with you there. And then there's things like XPEV. The only times I've ever really traded XPEV were I buy leaps when it's basically like 850 or lower. I mean, other than back when it was a $30 stock or whatever. But recently, that's what I do, because I know it's going to make this explosive move, but I don't know when or why or anything like that. So I just want to just be in it, and then the move happens, and then I get out of it. I wait for the next one. Whereas there's some that I just have a lot of precision, and those are the ones you see in me post in the morning, where I'm just like, okay, probably going to drop to test this level. You can scalp puts there on the bounce. You can catch this, and it's there's just a lot more familiarity with the kind of the intraday movement there, and those tend to be lower float, large cap stocks, and that's what MDB and MSTR have in common. And where I don't need to see um, you know millions of dollars in option orders in a day to get an idea of where it's going to go. In fact, it's the opposite of that. Those stocks are noisy. The ones that people say have the best flow with them, Apple and Tesla and Nvidia, um, to me do not. I don't think so, because there's just so much positioning and swaps happening and neutral trades that it's just noisy, and plus all the retail gamblers. I like the quieter stuff, and that's really what we mean by boring. A lot of times it's the product is something like it's copper or oil, or it's something. It's not exciting. It's not cutting edge tech or whatever. I mean, that's part of what it means to be boring, but also it's just that um, it's quiet, and a lot of traders don't really give a shit about it, and because of that, the people who are buying, the whales who are buying, they're not trying to lure retail in to screw them over. There's more of a kind of pure move happening there, and so that tends to be something I target as well.
Yeah, yeah. The noise or lack of noise, it kind of reverts over to the share side as well. It's just a little different. Um, in those charts that people don't know, and it's just how many eyes are on the chart. But you do get cleaner moves; they just don't happen as quick. You don't get as bad sell-offs without news. So completely understand. I've been calling them the B plus setups or the B plus tickers, not necessarily B plus setups, but just the names but they're not like super sexy to you. Those are the better things to trade. Like, who doesn't know Crocs? But it's just not
Yeah,
something. Sounds like it's not Tesla. Um, and
right,
and the same with like Play or Build a Bear, Macy's. I mean, they're household names, um, but they're not that sexiness that gets all the attention that people flood in and out of. Yeah, and I think those are the better places to day trade with you. Um, we kind of wanted to add to that whole what people are looking for. If you're one of them guys at work and you don't have time, I think that the chart you're looking at needs to match the time you're on. So if you can only look every
yeah,
couple of hours, you shouldn't be looking at a 5 minute chart. You should be looking at an hour or a day chart only, because that's what you're going to have to trade off of. And I think you'll just see things more clear. But we get a lot of people that just get these. It's up, a 0.5% during the day, and it's like, well, have you looked at the chart? Because it was down 4 yesterday. Even if we get 2% of that back, we're still down 2% in the last 48 hours. And they just get caught up in those micro moves. Um,
yeah. I get that question, like, why is whatever tanking, and maybe it's down 2% and it was up 6% the day before. So yeah, I know what you mean there, and that and the if you can trade based on, like, at 11 o'clock, I have a break at my job. I'm going to sit down and I'm going to trade. Doesn't work that way. It really doesn't. I mean, you might get lucky and there's a setup right when you're sitting down, but that doesn't tend to be how it is. And then the problem too in here, and we had some really good trades at open, and it's something I posted had worked, and someone will then just be like, is it too late? Can I get in this? Like, I don't, you, I just don't think that that's a good way to go, and that's where you're going to have to be a little bit patient and looking at the longer term stuff. Gold was a good example. You park some money in gold options for January, you are likely going to go 50%, 100%, 200%. Like it's going to make that sustained move, but you're just going to have to park the money there and scale out.
Yeah.
It's not that instant rush, that adrenaline of, the $100 into $400. And I don't think you can trade looking for that. And that stuff happens, but can't really be your bread and butter to me.
No, I mean, I try to set examples for the room, and I don't know when I first posted 412 on SPY. I mean, I'm kind of cheating here because we closed there again, but finding just the common price that whether, and SPY is a great example in that regard. I mean, 412 has been hitting for almost a month and a half now, but we're, you know, $10, $12 below that range and $6, $7 above that range, depending
Yeah.
on the day, right? But we come back to this level constantly. We're figuring it out, and a lot of people get caught up in that, just that that's the to the minute of it, instead of trying to trade around a pivot. And I think that as soon as you can identify a pivot, even if the pivot's only going to last for 2 weeks, you're better off than, you know, just lottoing the opposite direction of the day before, because it seems like that's what goes on. It's just like, well, we went down, so we got to go back up, or we went up, we got to keep going up, and the bias just kind of takes over, in my opinion, instead of people actually looking at a chart and looking for simple relief from being oversold or overbought. Um,
Yeah.
and a lot of the charts that we play are that way, where they're not like really leaving local pivot, as we'll call it, but there's enough range around that local pivot to trade it multiple times. And I think a lot of people are just looking, like you're saying, for that one big trade, instead of, I could have had 3 trades on this. Goose figured out the 412 a while ago. I know she trusts numbers that I say. I think that's a big part of it.
Yeah.
But
Yeah.
if you're buying 412s at 405 last 2 weeks, I think you did well. I think you did really, really well on the SPY side. And again, most tickers we trade are that way. They just have a big range around a pivot or a level we trust, which produce base hits, not home runs. I think that's the point of that. Is, most of the stuff we're going to find is supposed to produce base hits. It's not supposed to produce home runs. Um, so if you're looking for home runs and a bunch of base hits, it's going to be hard to find. You could miss your base hit round in first base and get thrown out at second. That could happen to you too. So I guess know what you're getting into with our levels is kind of important, and reasonable expectations, because I don't think there's a lot of reasonable expectations.
Yeah, no, not at all. And it always, it concerns me with options traders, because it's a kind of trade where, you put money in and you can leave with nothing. You don't just leave, even with the shares. Like, even if you're just bag holding shares, you still have the shares.
Yeah.
But the options can just expire worthless. And so I think that when you find some success with options, I don't think you want to just keep sizing up. You want to kind of stay within yourself, move some of that into shares, park some of it in. We're at spots now where there's long-term stocks that you can start to build. And so just, focus on building and keeping that momentum, and don't try to grow too quickly, because that's always a recipe for disaster.
Yeah, right. While we're out, I got SPY up here. Let's talk about that a little bit. We both
Yeah.
didn't have the downside, but I'm giving you the dub here. We both got it breaking out a little more too, but we're kind of stuck in this range. Let's say 405, 417.
Yeah.
Seems like we're kind of stuck there. I didn't see that much downside last week. I thought we would come out of Wednesday, Thursday a little better and push up to the 420s, but just maybe a day or two behind, it seems. But yeah, you're going first here since you've won 2 weeks in a row. So what do you got
Okay. Yeah.
next week?
Yeah. Sounds good. So, one thing that seeing is there's a kind of battle right now over June 16th 390p, where it's still being sold. Like it's 56% bullish, but that was 70 something percent bullish about a week ago. So they're kind of chipping away at that, and so whales might be looking for a breakdown um, at 400. Now, I will say, like, I don't have a reason short term to really think that that is going to happen. That there's some imminent collapse or anything like that. But it is something that I'm kind of aware of and watch. So I think a more kind of realistic uh, target for the downside for me this week would be at this 405 level. I think we could go back and test that and kind of being a little more muted in my expectations to the upside. I'm going to say 416.
That's pretty tight range.
Yeah.
Yeah, these last two weeklies are 403. Um, I'm gonna look for a higher low. I always lead with my thesis because it's gonna dictate my decision. I really believe the market wants to go up at this point in time. I think we've been in a recession for a year. Not that we're going into a recession. Um, and
Yeah.
that with the debt ceiling, um, kind of being what's holding us back right now. So I think if they can get any deal passed on this debt ceiling, that's when we're going to move up. I don't think that's going to be next week, but I do think we are getting tighter towards the top. So I'm going to go 408 on the downside, and then I'm going to pick a little bit above our last two tops, which was 417. So I'm going to go 418 to the top. Kind of Bob Barkey'd you, but I'm a couple bucks the other way.
Yeah, no, that's good. That's good. I like it.
But I just really think that's where we are, and people like I don't want to say they don't step back, but they just get too into one thing or into the last news, and they don't update their thesis. But I mean, that's really what I think is holding us back right now is that debt ceiling. The market's scared of that more than the banks, more than the war, more than the lingering recession that we're already in. Um, but I think when that breaks out, we're hitting that 430 real quick. Like if they pass a debt ceiling bill, more than just 2 weeks relief or a month
Right.
relief,
Yeah.
this we do get a leg up here again. We're 440, 450 by the end of the year, though, in my opinion. I don't know how you see that, but
No, I do. And I follow the QQQ pretty closely, and I talked weeks ago about these the August highs, the move to 330 and all that, and that's within reach now. We're only 7 points off that, so I think definitely could see that, and then breaking through that, getting to like 375 or something. I think that's definitely plausible. I don't. I just see. I don't see a lot to like about the bearish thesis right now because they're just sort of all over the place. I mean, first it was a big flip, and now it's the banking thing's going to take everything down, and it's just not materializing that way. It's just their bias. They're trying to shape what's going to happen around their bias, and just isn't much follow through. And I'm always kind of the opinion that you've got to see the sellers take control, and they kind of have to prove something. And it's not a 1 day thing because everything's just ripping right back higher.
yeah, I don't know where the multiple is currently, but a month or two ago it was at like 16 for the S&P 500. I mean, that's
Yeah,
we were at 40 plus there for a while. So I mean, we're half discounted to where we were in 2018 if you go just on an earnings standpoint. How much more do you think we're going to go lower if you are a bear? That's the part of it I don't get. Are we going to
yeah,
10? I mean, we going to 10? We going to sub 10? I mean, that's something I don't think I would have to go back in history to look when we had a multiplier that low. So I mean, we're already down. Um, it just depends on how you look at it. I mean, the pennies and stuff. Let's take a stock like Rite Aid. Like In a good world, that's not a $2 stock. And for those B level things, companies to come back, that's really what's going to move the market up, in my opinion. Not your tech companies; those have already came back um, in a huge way, and holding their gains like I like to see it. Shout out to Tesla 150. That's just perfect relief for me. And you're seeing that in all those charts. Like Nvidia is not coming back. Tesla's not coming back. I don't even think Starbucks gets back below 100. Ton of names like that um, have held the market up. It's when the other stuff that starts getting up that's gonna leg up. All your spies and your SPXs and your QQQs and stuff like that. And just need the money to come back, in my opinion, and that's not going to happen until we get those positive catalysts or we get rid of some of these headwinds that we have. The war,
Yeah,
the
yeah.
war, the fear of recession, banking, and the debt ceiling. Those are the four that are out there right now. They're just really gloom and gloom. And what, three of those, I guess three and a half of those, are directly financial. I mean, they're really financial. The banking and the debt ceiling are just about money, right? The war, 50-50 on if that's about money. And then the recession, 100% about money. So, I mean, they're definitely financial issues that should be affecting the market, but the market has had enough of the real world's crap for the last 2 years. And it wants to move normal and naturally, in my opinion. Um, and you're seeing it like SPY. It's the one good time I think SPY is a good chart because you have three straight higher lows with a really flat top at
Yeah.
about 418. So I mean, technically, you can see the market wants to go up, but it won't go through a level. Um, we just need those catalysts. But I've been saying we need those catalysts since this time last year, when we first went to the war with Ukraine, or we first started funding that. So um, timing those events probably impossible. But the debt ceiling, that has a shorter fuse, right? Like that's going to have to either blow up or be taken care of in the next month. So I think that's the what's going to really move this market.
Yeah, absolutely. And I think we're at a point too where the I think the kind of the next phase here, we had a lot of layoffs in tech, and those were kind of the gave a sort of bullish spike to things. I think that those movements on layoffs get kind of less bullish, and so what people are wanting to see is how are these companies adapting now that they're more lean, and then you're seeing the earnings pay off for some of that, and that's like what happened with Datadog, and it brought up a lot of the other SaaS names as well, where the companies it's smaller, they still have a lot of active contracts and potential and all of that. So you're seeing optimism in a lot of these stocks that have been beaten down for for a long time. And Datadog was over $100 for for months, and it held that level pretty well for a bit, and then it's just kind of been just dropping ever since with a few spikes here and there. So I'm looking for a follow through on some of that momentum. People talk about the breadth of the market being bad, as in Apple, Microsoft, and Netflix and Meta, like the you have these big mega cap names dominating. Well, there's a couple ways that resolves. Either those big names are just going to fall down and collapse, like some people think is going to happen, or some of these smaller names start to work their way up, and maybe the larger ones pull back a bit, but they kind of can meet in the middle a bit, and so I think there's some potential for that too, where it's not the V-shaped recovery thing. It's not the COVID deal, but it's just a return to kind of normalcy, and I think that is something I'm looking for in a lot of names I follow.
Yeah, I mean we've been up for at least 6 months. All things aren't going to get up at the same time. Like everything's just not going to come back at the same time. The sexier stuff should come back first because it's going to have equal value. Let's just say equal value to the less sexier stuff. At some point in time, I'll use Tesla because it's the easiest one for me. Or let's use Nvidia because it's a better example. So Nvidia at 100, that's where people are just going to put their money. Nvidia at 300, well, now other things start to look better. Like maybe we get into some basic materials or oils, or some sugar water, right? Like at some point in time, those Teslas, Apples, those become not overvalued, but they're not as good of a bargain, and people will put money into other things. And I think we're teetering on that right now. But that's what you need to see for the market as a whole to pick itself up. Um, I don't think we'll use Rite Aid again. I don't think Rite Aid's going to stay at $2 and Nvidia is going to 800. I don't think we're in that kind of a market. But that's just a natural rotation. Like people are going to take the good stuff first. If you walk up to a buffet, you're taking the prime rib until it's gone. And I think
Yeah.
we're getting to a point to where the prime rib's becoming too expensive, so someone will start taking the New York steak. Um, and that's what you need for a lot of these smaller names. But like the you said Datadog, Facebook or Meta is a great example of what you're talking about too. I mean, they were in the dirt, too good ER reports after firing people, and they're right up to that 240 number that you picked. Um,
Yeah.
but you're those are, if anything, are the V recoveries, right? The sexy names are the V recoveries, but the market as a whole, it's gonna stair step up, and it's gonna need individual catalysts and reasons, like you seen with oil 2 years ago, for that to happen, in my opinion. Um, I think we're coming up on it, though. I really do. You're seeing it in leisure and recreation and restaurants and sugar water right now. Like those things are all doing
Yes.
well. They're all doing well. Airlines even. I think it was Delta. They had their biggest first quarter bookings ever. Like more people on a plane ever in Q1, and eventually that's going to translate to earnings if the company has their shit figured out at all. So you're
Yeah.
seeing it. You're just slowly seeing that stuff come back. And what I mean stuff, demand. You're seeing demand come back. Healthcare is probably another one. People go to the doctors, right? Like that's not stopping. Um, yeah,
Yeah. Well,
ranting a
and
little bit
healthcare
there.
is a good example too of it's the was the like the mega caps leading this kind of this move back up in the sector where it was LLY and
Hmm.
J&J. And then I have a few that we'll talk about in the second session that are still kind of beaten down. And then I'm seeing this path to recovery, this 15% near term move that I think is going to happen.
Yeah, they kind of got. They're the only one with a headwind or a really bad headwind because they were, we can't make money off this COVID stuff anymore. How are we getting, and that got priced in. You expect a little
Yeah.
pullback for that to come out, but hey, we still got good drugs in our pipeline. Um, hey, no, and you're seeing that right now, and I think you have to see
Yeah.
that kind of
Yeah.
action in every sector. You have to see the fear dissolve and some euphoria come back in some regard. EV was one of your sector notes this week, and I see that coming a mile away. Like, they all got oversold, almost diluted because of competition, right? Like, there was
Yeah.
your solos and your rides and all that, and the cream's gonna rise to the top there. Those some of
Yeah.
those
That we,
tickers are too cheap, in my opinion.
yeah, we've, and we talked about that for, months and months of, the winners and losers and who's going to actually show some potential to, really, produce something. And if you don't, then your stocks fall into 50 cents. But if you do, then you're gonna stay above that $4 or $5 level, and you're gonna head back to $12. And you just see those explosive moves on any kind of good news, and that's what happened with Fisker a couple times. So yeah, I'm with you there.
Yeah, and I think that one of the better sectors is that software as a service that you've been on. And I think in the long run, that's going to be your oil 2.0 because I mean those guys
Yeah,
they're dependent on bigger companies, but their bigger companies are also dependent on them. It's all contract based. It's not like I'm buying Datadog for my laptop over here, or
yeah,
or
right.
or
And
CrowdStrike or
and
Net.
Yeah, and much like oil, the comments I get on Twitter are really useless from people who want to try to teach me something about what's going on. But yeah, that's
Uh,
another story.
let's talk before we hop out of here. Let's talk a little bit about ER reactions.
Yeah.
Kind of pat myself on the back a little bit. I'm pretty sure in the last voice session I said the Monday, Tuesday, Wednesday reports are probably not going to do anything because of they're on the wrong side of the Fed decisions. Those Thursday, Fridays ones are probably better targets. And boy, did that pan out.
Yeah.
Guidance is still kind of king, um, in my opinion, but I think if you have cash on hand, guidance, and you hit anything close to top and bottom, you're gonna be fine. You can miss a little bit if your guidance is okay, but just get the feeling like most ERs are just like, are you still alive? Check, and if you are, there's plenty of relief in a lot of these charts. Um, Lemonade Mitchin. Lemonade would probably be a good
Yeah.
example of that. The thing was $10. Took off 40% on just, hey, we're still here as a company. Open was the same way. And I could sit here for 5 minutes naming them off. Very, very few Chegg reactions are we getting? Um, and if so, they usually
Right.
come back.
Yeah. The so one in particular that that I follow is solar, and solar had pretty negative reactions across the board. Um, because I think when you look at all the guidance I've read so far, that it's a sector where the rate hikes and some government credits uncertainty and like all that kind of stuff
Hmm.
was sort of a dark cloud hanging over it. But what I think you have to keep in mind is that Enphase had been the opposite for a really long time, where it was moving way up to past like $300 as the market was in a kind of disaster mode. So it's just sort of things are catching up to it. Real estate was kind of the opposite, where all that bad stuff that happened just really hit the stocks heavy, and we talked about how like any kind of recoveries is going to happen first in the stocks, and it's going to happen pretty quickly. And I've been staying away from open, but I did get into Redfin based on
Yeah.
that thesis, and that panned out really well.
I mean, even Zillow's up 20% from 40, and
Yeah.
we were on it at 36. I mean,
Right.
yeah, yeah, it's finding oversold, but it's that divergence, right? And I don't think we use that word enough. But you're looking at you want the stock to divert from the market, and I mean the real market. If real estate's
Yeah.
flat or trending up, you want the stock to be going down, and you see that divergence, and then eventually that will work itself out. Real estate's a great example of a boring sector that I don't think many people play. And they're all up 20, 50% um, over.
Yeah. Exactly. And even so my the kind of boring long term one, when I got really interested in that on its dip back to 60, and so I grabbed kind of as much as I could, like under 60, and it's now 62.95. Now is that some dramatic great trade for the option side? It actually is better than you might think, because again, the IV is very low. It's a large cap real estate stock. So a 1% move is actually a big day. And so it's good on the option side, good to kind of load on the long term on the share side. But that's not really like a sexy name. In fact, I only ever see dividend investors even talk about it. But that's a big part of my approach too. Is especially for options traders, I want to try to just sort of focus people. You kind of just sort of grab your head and turn it. Like, look at this one, look at LLY, look at um, Honeywell, look at John Deere, look at what you can get off of a pretty small move. And the good thing is it's not going to dramatically just go against you. It's not going to tend to do that. So if things go bad, you do have some time to get out. And that's why I spend all this time cycling through market caps. I had someone ask a question, with your notes, what's your approach for listing what and when? The short answer is I'm looking for the best opportunities. The longer answer is, I want to see within the individual market caps, I want to see some opportunities in the small caps, the mid caps, the large caps, and just see some coherence in the sector. If something's just an outlier within the sector, it's not it's a different kind of trade, and I'll just talk about it individually. But I want to see some kind of sector coherence, and we are seeing that in real estate right now.
Yeah, no, and that's kind of rubbed off on me. Um, but I've curtailed it to my style a little bit. But CLSK, I mean, I was on that 3 weeks ago as a Bitcoin lagger because it was the only one not
Yeah.
moving in the sector. Um, if you're gonna be late, try to find what else is late, not what's already moved. But I make a killing off of that. Um, Applying your style, I guess, looking at a sector as a whole and looking for what isn't, well, looking for strength in the sector as a whole, looking for what isn't moving, and then doing a little DD to see if there's a reason why it shouldn't or why it isn't moving, and if there's not a reason, playing that chart because it should catch up or find the same relief as the rest of the sector, in my opinion. But
Oh yeah,
CLSK is the best example I can give of that guy.
it happens in oil all the time. In fact, the whole reason I even looked to oil late in the week was that I saw stuff like Comstock Resources, like Cork,
Yep.
CRK.
Yep.
Like they start buying that, and I'm like, well, they don't just buy that for the hell of it while it's selling off. That's usually a pretty big signal that we're going to kind of turn around. So happens in the smaller cap steel all the time too. So yeah, definitely something I look for.
Yeah.
One more. I'll go ahead. Yeah.
Yeah. No, it's a goofy foot, or what do you want to call it, inverted sticks on your controller, right? Like it seems
Yeah.
like the opposite of you need to do, but that's what you need to do. Running to the guy that's already ran probably isn't going to be the most rewarding. It's just bias confirmation. It's a big part of FOMO. FOMO to me is just greed, a form of greed. So if you're attracted to things that have already moved, you're kind of looking backwards and not forwards, and you need to trade what's in front of you. Simple as that.
Yeah, that's always my biggest issue with some of the people who post charts on Twitter, like these weekly charts, and they'll just be like, "Oh, end phase is breaking out here," and I was in it like literally 30% ago, and I'm sort of like, would be nervous about adding up there. I'm looking at the other side at that point. So yeah,
Yeah.
definitely
I
know
mean,
what you mean there.
for I guess a soul searching point for this group, if you sat here and listened to me talk about 150 on Tesla for, let's say, a month, let's just, so I'm not going too far either way, but it was a solid month where I said, wake me up when we're at 150. And you didn't
Yep.
have a plan either before, like, all right, I trust Unk, it's going to 150. How do I play it to 150? Or all right, when we get to 150, this is what I'm gonna do. If you didn't have that foresight and you're just waiting to react when it gets to 150, that's why you're not successfully trading with our information. That's it right there. Is you're not forward looking enough. You're just waiting for it to happen and then saying, "What do I do with my hands when it happens?" And that's not what you should be doing. Um, have some foresight. Write out some plans that are in the future. When those plans come to where you can execute them, execute them. Like
Yeah.
that's more of the problem I see us having with a lot of people in our room is they wait for it to happen and they say, what do I do with, where do I throw my money now? And it's like, your plan should have been worked out since we knew this was coming for 3 weeks.
Yeah, absolutely. And if you don't like scalping like the shorter moves, like the snow's a good example. Like when you see me say, Unk's going to be buying shares on snow soon, and that's me saying that I see some downside here. It's gonna pull back to that more historical pivot, and that's when you can that's when I start thinking, okay, 180 for August or November or, something like that. And even if, for Tesla to go to 150, it's a pretty dramatic sell off to get there. And I know that what you're thinking is like that it's just going to keep selling off. And you see all the crazy noise about people talking, 100 again or 90 or, whatever. But that's where the respect part of RTL happens, that it's going to hit these levels. And yes, it can break down further, but it's gonna think about it, and it's gonna be a spot where it can catch, and then the buyers can start to step in, and it can go the other way. And I don't know how many times people have to see this happen before they start just trading that. If you want to wait a minute and let it confirm, that's fine. But you can be overly cautious and just miss the whole move, and then you're chasing the other side. So I think you want to take some of the emotion out of it and have the plan beforehand, as it breaks down to those levels.
Yeah, and you just kind of seen that with whole coin thing. The coin thing opened up my eyes because I'm not an option
Yeah,
trader, right? And I came up with a
yeah,
coin plan. I followed it. I followed what I said. Buy some coin 55s about a month and a half out, 2 months out. You'll be fine. That
yeah,
trade went swimmingly. That trade was
yeah,
an easy. The way I played it, very similar to you. I waited for the flush below 50 and just played it back to my level.
yeah,
I took my, it was around $400, and then it went $5 more. But I just play the relief to my line. I didn't try to get it all. But the whole point of that is you can have two totally different plans, be playing options and shares, but you have to have the plan going in. It's just it's let's say it's 65% of it is just not
yeah.
showing up and saying, what are we trading? What buttons do I click? It's that planning part that needs to be a repeatable process. Um, and then letting the plan come to you. And I don't think I think a lot of people just skip that step and they just want to know what buttons to click. And then when I get in the trade, I'm going to make a plan depending on what happens in the trade.
Well,
Um,
and the worst advice I see on Twitter is from the price action traders who just say, we'll just react to what happens. I think that if you try to do that without some idea beforehand of this is sort of my, the bullish setup I'm looking for, the bearish setup I'm looking for, then that's kind of a recipe for disaster. And those are the accounts that you see, take a break or switch to spy, or like because you're going to get burned doing that. And it's why those option triggers that notice you're not seeing as much anymore on Twitter, that the reason those weren't working is that a lot of this stuff is range bound, and their call triggers are actually pivots of resistance, or
mm-hmm.
a supply, or however you want to say it, where it's gonna have trouble breaking through up there, and they're adding calls when it hits that line, which is the opposite really of
Yep.
what you want to do. It's got to break through and confirm that. And one quick example of that, MSTR. I was playing rejections at about 317.50, three or four times, and then on my Friday morning plan, when I saw what Bitcoin was doing, I'm like, and what Apple had done, I'm like, we're probably going to break through this, confirm, and go higher. And I think we closed at like 326 or something like that. So yeah, I flipped bearish to bullish, but I had a reason to do that, and I wasn't just reacting after the fact. So that's where you have to have that plan going into it, a plan around a level, and you'll start to get somewhere.
Yeah, no, I mean that's why that last guy we were hanging out with failed. His breakouts went away, and that's why
Yeah,
those lines don't work anymore because they're not consolidating around their level, giving entries and then making a leg up anymore. And that's just not the market we're in. Um,
yeah,
you got to buy red if you're buying calls. I don't know how else to say it,
yeah,
but
yeah.
it's
And
kind of
I mean, how many like call up just indulge me on this one, MDB real quick,
oh god.
where you look at this, the reactions around 220, and how you talk about buying red. These this is the three times now when it goes, it pulls under 220, and I'm just like, I just load up some calls a week or two out, and it just makes this explosive move higher, um, based on that. And this last one, the catalyst was those D dog earnings. It was, just moving in sympathy, but it's up 10% the next day, and so that was because of how it was reacting around 220. I didn't know it was going to do that. I saw the flow was, relatively bullish, but I'm like, I want to be in this. I don't want to chase it when the move's happening, because a lot of the move's going to happen in pre-market, and you just leave yourself enough room in terms of the expirations, to catch that. But yeah, this has just been just a really solid level, and just going to stay relevant, I think.
Yeah, a 220.02 is my upper level on that chart. That kind of goes back to what I was saying about if you can only check a chart every hour or every couple hours, get off the 5, get off the 10, get off the 3, get off the 1. You should be looking at no time frame shorter than an hour. You're probably
Yeah,
better off on a daily or a weekly. That chart stands out. If you literally just buy below 220 and you sell it at 230, you've been fine the last, let's say, 6 weeks. Like,
yeah,
it's clear as day. It's If you can't see that, um, it's because you're zoomed in too far. You're looking at these micro
right,
moves. I mean, if you're talking 235, 240, 225, any of those numbers, it's because you're too zoomed in on the chart. 220 is clear as day on that chart pretty much throughout the whole year.
yeah,
It doesn't
yeah,
have a candle since February that hasn't touched 220, which is why that's a pivot.
yeah,
Perfect.
yeah,
We're about an hour here. Anything else you got
yeah.
going on? Or
Just I oil's gonna see some relief. I think what in hindsight, what we saw is that we got kind of a move off that OPEC cut, and then it just came back. But I don't think oil's gonna not want to stay under $70. That's kind of how I would put that. I don't Any move under 70, I start looking to go long, because it's just bouncing back from that, especially around that 60, 68 level. So that's kind of a level to watch. And then real quick too, copper staying in the middle of my zone. So my two key numbers are 375 and 4, so 388, and just going to kind of watch there. There's some stability in the sector as long as it doesn't break down back to 350. So that's another number to watch.
yeah, I'm gonna hot take it here. I just want it on record, but oil $90 by August 1st. See it coming.
Nice.
See it coming.
I'm with you.
Perfect. All right, we're ready to get to work.